Hello everyone, how's it going? In today's video, we're gonna be blending candle bias and candle profile. These two might sound similar, but trust me, they are not the same. And knowing how to blend these two might just be the blueprint in your trading career. And my goal in this video is to help you look at the market from a completely different lens. And I can assure you, after you complete this video, you're never gonna look at the market the same way again, because you have so much information that you never knew that existed. And these terms sometimes like the daily bias, daily profile, weekly profile, 4-hour profile, sometimes they sound like a mountain that you cannot climb, but trust me, they are very simple to understand. And when you talk of candle bias, you're just talking about the direction of the candle. Is it going to be a bearish candle or it's going to be a bullish candle? And now when you're talking about the profile of that candle, you're talking about the behavior inside that candle, right? How will that candle develop? Maybe on the hour time frame. What would the first hour do? What would the second hour do? What would the third hour do? Or if it is a monthly candle, what will the first week do, the second week do, and what will the third week do? Let's take, for example, this is a monthly candle. Just assume this is a monthly candle, this bearish candle. You know the candle will open high first, trade into a key level, then trade lower. So now, this is the profile of this monthly candle, where maybe the first week will open, maybe doesn't trade into any key level, then the second week will trade into a key level, then third week will reverse, then the fourth week will expand. Or assuming that this maybe is a daily candle and you want to profile it, you profile that daily candle on the 4-hour time frame, where maybe the 18 or 1700 candle will open, then the 21 or 2200 candle will trade into a key level, the London, the 2 a.m. candle will reverse, then the New York will expand lower, right? Let's take a deeper dive into it. What I mean is, assuming that you already have candle 2 as a reversal candle and you're anticipating candle 3 to trade, how will candle 3 form? It will open higher first, put its high into a key level, then expand lower. Now, when it open and trade in the opposite direction, that is the protraction phase. And let's take, for instance, you are trading the monthly candle. That means you'll have week 1 at maybe a reversal candle from a key level. Like for this example, we have this candle 2, this candle 1. I just assume it is within the previous month, or maybe it is the current month. Then the first week opens, doesn't trade into anything. Then the second week reverses, present a reversal candle. Then you can trade the second week into a key level where you want the high of this monthly candle to form from. Then you can trade the fourth week to expand, as a candle will print as a bearish candle, right? What I want you to understand here is a bearish candle will always open high first. There will always be a protraction phase, right? Which is a Judas swing, right? So it will open, trade into a key level, and that key level will exist within the previous monthly candle. If it is a month, you're on the monthly time frame, right? And if you're on the daily time frame, that key level will be within the previous daily candle. On the lower time frame, that is why you see me put a key level, but on this lower time frame candle. So here you have this candle, candle 3, right? This is what we are studying, this candle 3, right? We anticipated this candle 3 to be a bearish candle. And you know that this candle 3, if it is going to be bearish, it will open high first into a key level within candle 2, then before it can trade lower. So this phase from the opening price, from the opening level, into a key level, that is a protraction or the Judas swing, right? And assuming that this is a monthly candle, that means this will be week 1, week 2, week 3. You will not wait for the first week, the second week, then third week to trade into the key level before you can trade the fourth week. You can also trade this protraction phase. That means you will need to identify your bias also in this protraction phase, but adjusting your target, knowing that it will only trade into a key level to put the high of this candle in to reverse away from it, right? That is, you can also trade both direction every day or every week, every month. Every day the market trades in both direction. It trades higher and lower. Even if the bias of the candle it is bullish, it will open low first, put its low on the key level before expanding higher. Like for this example, take a look at this candle 2, right? It opened, trade lower, manipulate candle 1, then trade back within its range, right? That means it opened low before trading higher, right? And that's the same thing you have on this higher time frame, which is the protraction phase we are studying right here. If this is a monthly candle, that means you can trade, you can wait for the candle to open, maybe trade into a key level, present a reversal that you know that the next candle will trade into a key level where you're anticipating the high of this candle to form from, you can take a trade into that key level before anticipating it to then reverse and trade to the monthly draw on liquidity or the weekly draw on liquidity or even the daily draw on liquidity. And that is what you have here. Once the protraction phase is completed and it presents a reversal confirming that the high of the day or the high of the week has formed, or even the high of the month has formed, where you have candle 1 trade, then candle 2 failed to display above the high of candle 1, closing back within its range, then you can anticipate candle 3 to expand lower, right? So the same signature that you are seeking to trade the protraction phase is the same signature that you are going to seek to trade the expansion to complete that higher time frame candle. So once you know this, you know that, okay, you are getting your higher time frame bias. You know that this candle is going to be bearish. But now, within the profile of this candle, you are also getting a lower time frame bias. Let's take, for instance, this is a monthly time frame like we are talking about. So you know that the first week traded not into a key level, the second week reverses. Now you are getting a bias within the protraction phase of the monthly time frame in your profile, right? So now you're anticipating candle 3. You get a new bias on the lower time frame, but with a short-term target. So you're getting a bias from your profile of the monthly candle. Or let's take, for instance, this is a daily candle and you're profiling it on the 4-hour time frame. This lower time frame is your 4-hour time frame. You know that the first hour is going to open, maybe trade into a key level, or if it doesn't trade into a key level, then the second hour present a reversal, and you know that the third hour will be expansion. That means you are getting what? Your bias now from the profile, right? And you are maintaining a bearish bias on the higher time frame, which can be the daily time frame or the monthly time frame, right? So let's take a deeper understanding on that. What that means is within the monthly profile, you can get your weekly bias from it because you profile this monthly candle on the weekly time frame. Like what happened here. Maybe the first week opens, the second week trade into a key level, the third week reverses, then the fourth week expand. So this is the profile of this monthly candle. Now, once the first and second week trade into a key level and the third week reverses, what are you anticipating that to do? To expand. That means you are getting bias from this monthly profile, right? From this monthly candle profile. That is what I want you to understand here. The profile of the monthly time frame will give you your weekly bias. Your weekly profile will give you your daily bias. What does that mean? That means, let's take for instance, this is your weekly time frame. You're anticipating this weekly candle to trade bearish, right? And you need to profile this weekly candle. Where will you profile this weekly candle? It will be on the daily time frame. You want maybe Monday to open, Tuesday trade into a key level, Wednesday reverse, Thursday and Friday expand. So once you get a reversal on Wednesday, then you can anticipate Thursday to expand, right? That means what? You are getting your daily bias from the weekly profile. And let's say you are on the daily time frame. Where will you profile the daily time frame from? You will profile it on the 4-hour time frame. The same thing. Let's say this is a daily time frame. You anticipate this daily candle to be bearish and you want to profile this daily candle, how it will form. That means maybe the first candle, which can be maybe the 1700 or the 1800 candle, will open. Then the 21 or 2200 candle will trade into a key level. The 2 a.m. will reverse. Then the New York candle will expand, right? The 6 a.m. candle will expand and the 9 or 10 a.m. candle will also expand, right? That means once you get this 17 or 1800 candle open, the 2100 trade into a key level, the 2 a.m. reverse, then you can anticipate what? The 6 a.m. candle to expand. That means you're getting the bias of this 6 a.m. candle from the daily profile, right? You get it? So you're getting the bias of the 4-hour candle from the daily profile. And you need to know that each of these can be traded independently. You can anticipate, you can determine the bias of the monthly candle. You do the profiling on the weekly time frame and you look for execution on the 4-hour time frame. So you can profile the monthly time frame on the weekly time frame. You can profile it on the weekly time frame, then you execute on the 4-hour time frame. You can profile the weekly time frame on the daily time frame, the weekly candle on the daily time frame, then you execute on the 30-minute if you don't want to drop lower, right? And you can profile the daily candle on the 4-hour time frame and you execute on the 15-minute if you don't want to drop any lower. You can profile the 4-hour candle on the hourly or 30-minute time frame and you execute on the 5 or 30-minute time frame if you don't want to drop any lower. So each one of these can present you another bias that you can use to profile, and it can also help you to execute without any doubt. So you can get your monthly bias, you profile it on the weekly time frame. The monthly profile will give you your weekly bias. So your weekly profile will give you your daily bias. Your daily profile will give you the 4-hour bias, and the 4-hour profile will give you your hourly bias. And you can also execute this on the 4-hour time frame. Let's dive a little bit deeper into this concept. Let me show you some examples with candles, right? Let's take, for instance, this is the monthly time frame, right? You have candle 1, candle 2 trade into a key level, right? And candle 3 reverse. And if you get this swing formation, I'm sure by now we are more familiar with the swing formation, which you have a C3 closure, right? So this is a C3 closure swing formation. So once this happens, this form, what do? You anticipate candle 4 to be an expansion candle. That means you've gotten the bias of candle 4 on the monthly time frame, and now you need to profile this candle 4 on the weekly time frame. How do you want this candle 4 to form? You want it to open, trade into a key level. You want it to open, trade into a key level. Like for this example, we have a fair value gap. So we have the first week open, second week trade into a key level, and close back within the range of week 1. Once this happens, you're anticipating what? The third week to be an expansion candle lower. That means you have gotten the bias of this week from this monthly profile. Now you're anticipating the third week to trade lower. This becomes what? Your weekly bias. So now on the weekly time frame, you know that this third week will expand lower. Now you need to profile this third week where on the daily time frame, right? You are profiling this weekly candle on the daily time frame. How do you want the daily candle to form, the weekly candle to form? It will open, trade into a key level within the previous weekly range, then put its high before trading lower, right? That means you can get Monday and Tuesday trade into a key level. Wednesday reverse it. Once you get this reversal, this swing formation, which is right now a C3 closure, where you have candle 1, candle 2 trade into a key level, then candle 3 display below the low of candle 2, then you can anticipate candle 4 to trade lower. So now you're anticipating this candle 4 to be an expansion candle into this low, right? That means you've gotten the bias of this daily candle from the weekly profile. That means you have now what? Your daily bias. Now that you know that the daily candle should trade lower, how will the daily candle form? It has to open, trade into a key level. And how would that develop? It can be maybe the first hourly candle open, the second one trade into a key level. For this example, we have a fair value gap. And if it close back within the range of candle 1, then you can anticipate candle 3 to do what? To expand lower. That means you've gotten the bias of this 4-hour candle 3 from the profile, from the daily candle profile, right? Now you have your bias of this 4-hour candle here. Now, how do you want this candle 3, this 4-hour candle to expand? You want it to open, trade into a key level, put its high, then you can trade lower. That means what? The first hour will open, then the second one can trade into a key level. Like for this example, we have a swing point, and maybe we get a reversal candle. Once that happens, that means you want the candle 3, candle 4. Sorry, this is supposed to be candle 4, not candle 5. So you want candle 3 and candle 4 to do what? To trade lower. Let's say for example, candle 3 already traded but did not trade into a key level. That means what? You're anticipating candle 4 to trade into that key level. That means you've gotten the bias of candle 4, the hourly candle, from the 4-hour candle profile. Now it continues. You've gotten the bias of the 4-hour candle, so you can profile it on the 5-minute time frame. So it continues. This is how you can analyze your market, the chart from the higher time frame. You can do your top-down analysis, But each day or each week, each month, you need to know what are you trading within. Are you trading the protraction phase or you are trading the expansion phase, right? Like I said, let's say you want to participate in this monthly candle, this candle 4, you know, the month is going to close bearish. It's going to be a bearish candle into the monthly key level, draw on liquidity here. You will not sit and fold your hands for the first week to trade without you participating, and the second week traded without you participating and waiting for week 3 to get a trade to trade lower. No, you can participate in this protraction phase, right? Once you know that, okay, a reversal candle has formed within the previous month, then you can anticipate this first week to trade higher. If it doesn't reach into the key level where you're anticipating the high of the monthly candle to form from, then you can also trade the second week higher, but you need to know that your target is limited. Once the market reaches into that key level, you're no longer trading higher anymore. You are waiting for a confirmation that the monthly candle high has formed. Then you look to trade the candle into your monthly draw on liquidity. And once you got the bias of the week, the weekly time frame from the monthly candle profile, then you can also profile that weekly candle on the daily time frame. You will not, on the daily time frame, you will also not sit and wait for Monday to open, trade into a key level. If it doesn't, then you wait for Tuesday to trade into a key level before you participate on Wednesday. No. If Monday presents an opportunity for you to trade higher, go ahead and trade. Like for this example, we didn't have any reason to trade Monday because Tuesday did not form any reversal. You can see that. Friday did not form any reversal. So these are the days where Monday you will not trade because you don't know Monday can open, trade lower to put a short-term low before trading higher into the key level where it will form the weekly high to trade lower. So the same confirmation you are seeking to confirm the high of the week or the high of the month, you still need that same confirmation to trade the protraction phase, right? So once you see Monday trade higher, not engaging with any key level, and it's pretty close to the key level where you think the high of day should form from, then you can go ahead and trade Tuesday, but with high precaution, right? You would trade it with maybe a very low risk because there is no established law to help you trade into that key level, or even you can wait for the reversal to form from that key level, put in the high of the week, then you can anticipate Thursday to trade lower into the weekly draw on liquidity, and Thursday now becomes your daily bias, right, on the daily time frame. And how do you want the daily candle to form? It will open high first. Now let's say the previous hour of the previous daily candle present a reversal but did not expand into any relevant key level where you think the day of the high of the day can be put from, then you can trade the early hours. You can trade the 1700 candle, you can trade the 1800 candle. If manipulation occur late within the previous candle, then you can trade the early candles of that next day, right? So you can look to trade candle 1 and candle 2 into the key level, but you know that you will not be targeting anything beyond the key level where you think the daily high will form from. And once you trade into that key level, you only wait for a reversal to become firm for you to anticipate the direction of the next 4-hour candles to trade into your daily draw on liquidity. So it is very simple to blend your bias with profile. So let's take a look at some examples. I want to be using now recent PA. So the examples I'm giving you, you can actually go into your own charts and look for them and actually study what you've learned in this video. That's the best way you're going to learn, right? So we'll go around the monthly time frame, starting from the monthly time frame. I already tried to put some things together so it will save time, but I didn't do much. So I prefer to start from this candle because this month hasn't closed yet. We still have 3 days and 22 hours for this monthly candle to close. So we'll take a look at the candle that the previous month. So what can you see from this previous month? You can see that we engage with this high, right? We engage with this previous high. And did we come from an SMT? Let me see. Yes, we had an SMT with this low. You can see that, right? So we manipulated this low and traded into this key level, which is a swing point, right? We engage with this key level. And as you know, when price engage with a relevant key level, it will normally go into a new phase. It can either be a retracement or a consolidation. Like for this example, it was a consolidation. So you can see that this monthly candle did not take either the high or low of the previous month. So we consolidated. So let's take a look at how this candle formed, right? So we're going to profile this monthly candle. And where can we profile this monthly candle? It will be on the weekly time frame, right? And what do we know about? We know that if this candle engage with a key level, we know that the next month, certainly we will get maybe a retracement or a consolidation. So the candle will definitely be bearish away from this key level, right? So how do you want a bearish candle to form? It will open high first into a key level. Now, when you look, we just manipulated this key level, and we haven't retraced yet. We cannot manipulate this key level twice unless we are forming a two-stage SMT. And this high is pretty much too far away from this candle closure, right? So there's no way we can trade back into this high. So there is no key level within this, and the only key level we can trade from will be the previous weekly high that we can reverse from. So we can only reverse from the previous weekly high. That's why you see what? The monthly candle open high first. So we have the first week, which is this, right? The first week open, traded into this fair value gap. You can see, right? It traded into this fair value gap right here to give room for this next weekly candle to trade to this high. So how did the monthly candle form? You can see we open, trade high first, put the monthly high, then trade lower. As you know, you can trade either the first weekly candle, but since you know that there is no data that gives you that confidence for you to trade higher, what are you trading higher to? There is no key level to trade to. You can't anticipate the month to open and trade into this key level, no. So you're going to wait for what? For this first weekly candle to print, right? Now I'm going to show you how you can maybe also trade this weekly candle even when you don't know how the weekly candle is going to form, using just its profile on the daily time frame. Now let's say you don't understand how this weekly candle could have formed, right? You can profile it on the daily time frame. Look at how is it developing. You know that if this weekly candle is going to be bearish, then it will need to open high first, trade into a key level, put a high, then trade lower, right? That is what it would need to do. It will need to open high, trade, put its high, then trade lower. And if it is going to be a bullish candle, it needs to open, trade into a key level, put its low, then trade higher, right? So dropping down the daily time frame, because that is where we profile the weekly time frame, right? I just want to show you something here before we get back to the monthly time frame. So you could drop here. Let me mark that out. On the daily time frame, so this is the daily candle. You have Monday, trade from where? From no key level, right? Friday did not present any reversal from a key level. There was nothing that can give you the confidence to trade Monday. And Monday just expanded lower into this fair value gap, and you cannot anticipate Tuesday to expand lower because we don't have any confirmed reversal that the high of the week has formed, and you need to seek more data. That means you need to wait for Tuesday to trade, to close. Now Tuesday just closed as a consolidation candle, right, within the Monday candle range. Let me take this off to show you something. You can see that Tuesday just consolidated within the Monday candle. It didn't engage with any key level, right? But that consolidation formed a key level, which is a fair value gap, right? It formed a key level, which is a fair value gap. From the Friday candle, Monday candle, and Tuesday candle, we have a fair value gap. Now, you've gotten a key level that you can anticipate a reversal to form from. That's where you wait for Wednesday to trade into that key level. And if it presents a reversal, which we got here, a C2, closure as Monday, as Wednesday traded into the fair value gap and close as a reversal candle, you can then anticipate what? Thursday, sorry, you can anticipate Thursday to be an expansion candle into this low. So you are profiling the weekly time frame, right, on the daily time frame. Now you have gotten the bias of Thursday candle. So let's go back on the monthly time frame, take a look at what we're trying to understand there. So we're looking at this monthly candle. Let me let it form. Okay, taking this back. So we have it here. Let's say the monthly open. So we have the monthly time frame there and the month open here. So we were just looking at this weekly candle profile and this low day, like low probability day, because low probability week, because you don't have any data to trade away from. Okay, you know, we engage with this high and then expand away from it. So you're anticipating the early month to trade in the opposite direction, but there is not established high yet already, and you're not sure what which phase the market will go into, because you know once you engage with the key level, the market can either consolidate or it retrace. But you know that either ways, this month will trade lower at some point, but it might not trade drastically, right? Because it might just consolidate within the range of the previous month, which is what it did, or it can just retrace. So you are not sure of what this current monthly candle will do. So you need to seek more confirmation. You need to seek more from price action, right? So you can't be sure with this week because you don't know what it's going to do. You have a fair value gap here and it's pretty much close. The target isn't far away. So you just hop in and trade into the fair value gap. Now you don't have any key level to target again for this week. So you let the week close. Now once it closes as a reversal candle like this, not even a reversal candle, like a consolidation candle. Now you know that if we are going to trade lower, this monthly candle is going to trade lower. It is going to form its high from the previous session high, right? It's going to use the element of time. The previous weekly candle now becomes a key level that the monthly candle can form its high from. So that's why you have this candle to trade into this high. But now you are not confident where this current week is going to trade to until it engage with this high. Once it engage with this high and form a reversal, now you can anticipate what? This current week, the next candle, which will be candle 3, because we have candle 1, then candle 2 trade higher, fail to display below the high, above the high of candle 1, closing back within its range. So once that happens, you can anticipate candle 3 to do what? To trade lower, right? And you need to confirm also this framework, this profile with an XMT. So you're profiling the monthly candle, so on the weekly time frame, right? So you want to confirm the reversal, confirming that the high of the monthly candle has formed with an XMT or a PSP. Let's take a look at if we had an SMT or a PSP at this key level. So here we are with GBP USD. Yeah, we had an SMT here, which was a strength switch. If you watch the previous video, you know what that is. So we had a strength switch SMT here because we had like a two-stage SMT at some point here. But just the video is getting too long. I don't want to rehash this again. So we have an SMT here. This week failed to display above the high of the previous week, so closing back within this range. So now we can anticipate what? This current week, which is week 3, to trade lower. So we are getting the bias of this weekly candle from the monthly profile, right? The same thing we learned here. Where do you get the bias of the weekly time frame? You get it from the monthly profile. If you're anticipating the monthly candle maybe to trade lower, you want it to open high, trade into the key level. Once the high has been formed, confirmed by an SMT, then you can anticipate the third candle to trade lower. Once you are sure that the third candle will trade lower, that becomes what? Your weekly bias. So that is what we have here. So now we are very sure that this week is going to trade lower. That becomes our weekly bias. Now you need to profile this weekly candle. How do you want the weekly candle to form? It will open high first, right? So, and where do you profile the weekly candle? you profile it on the daily time frame. So you drop on the daily time frame and you want the wick to open high first, right? Into a key level, put it high before you can trade lower. But now when you look under lower time frame, which is a daily time frame, what you see, we had engaged with this high and form an SMT, and we then reverse from it. We went through this in the previous video, right? For those of you who have watched it, which is on the weekly profile. So we engaged with this key level and did not expand away from it. And like the same thing that we had on the monthly time frame, where you are no longer anticipating this current monthly candle to trade back to this high because we have already engaged with it. You just want to see a reaction away from that high, right? That's the same thing we have here on the daily time frame, where you have the previous day or previous week had engaged with this key level and formed what? An XMT, but did not expand away from it. And within this manipulation, there is no other key level. So the market now can form its high, or the weekly candle can form its high from what? From the previous session, which can be Friday's high or Thursday high. In this example, we formed the high of this current week from Friday's high. So we had a manipulation, the Friday high, and closing back within its range. So we had what? A C2 closure. So we have a C2 closure confirming the high of the weekly candle with an XMT. You can see that, right? We took the high of the Friday candle on GBP USD, but on Euro USD, we didn't take that high of Friday candle. So we have an SMT to confirm the high of the weekly candle. So now we have a C1, C2, and we can anticipate what? C3 to trade lower. So now you have gotten the bias, your daily bias from where? From the weekly profile. You understand how you're connecting them, right? So you're getting what? The bias of Tuesday candle from your weekly profile. So now how do you want this Tuesday candle to form? You want it to open, trade into a key level within the previous daily candle, which is Monday candle, sorry, put this high, then you can trade lower. So let's profile this daily candle on the 4-hour time frame. So we have the early hours, which is a 1700 candle. Let me take this out. I think we have so many lines now and it's kind of saturated. I don't like it. So anyways, I just want to get this done. So we have the 1700 candle open. It did not trade into any key level, right? Just trade the lower, and there is absolutely no key level that we can trade to. Just this other block here, and it has been mitigated. We form the other block, we test it and trade away from it. So 1700 open, did not trade into any key level. 2100 did not trade into any key level, but the 1 AM candle formed an SMT. You can see that here, right? So you're profiling this daily candle, right? It formed an SMT from where? From a key level. Let me show you. It formed an SMT from a key level. We have a fair value gap here. There is a fair value gap, right? So we have what? Candle 1 on the key level, candle 2 trade into that key level and close back within the range of candle 1. So we have candle 1, candle 2. So once you get a C2 closure from a key level, what are you anticipating candle 3 to do? It should expand, right? So you're getting also the bias of this 5 AM 4-hour candle from where? From the daily candle profile, right? So you're anticipating the 5 AM candle to do what? To expand lower, because we have engaged with the key level and we form an SMT in that key level, right? To confirm the reversal, to confirm the high of the day has formed, or a continuation, because now the 1700 would form the high of the day here on this day, right? We did not revisit that 1700 candle high. So I'm just going to put 1800 because I trade future market. I haven't registered anything at 1700 here. So anyways, let me correct that to 1700. I don't want to get confused here. So the 1700 candle open, didn't trade into the key level and just expand away. And we get the 2100, didn't trade into any key level, but the 1 AM candle trade into the fair value gap and close back within the range of the 2100 candle, giving room for what? For the 5 a.m. candle to expand. So we have candle 1, candle 2, then you're anticipating what? Candle 3 to expand lower into your draw on liquidity, right? So you could also profile this 5 a.m. candle under hourly time frame or 30-minute time frame, right? So let's profile it. You're dropping down on the 1 hour time frame. So how do you want the 5 a.m. candle to form? You want it to open, trade into a key level, put its high, confirmed by an SMT before trading lower, SMT or PSB before trading lower. That is what you get here. You can see that we had an SMT here, right, on the 4-hour time frame. There is an SMT here, right, with this high. So you see that the 5 a.m. candle, which is this one, you see that this 5 a.m. candle, it opened on Euro USD. It did not take the high of the 4 a.m. candle, but on GBP USD it took the high. So we have an SMT here. You can see that on GBP USD, the 5 a.m. hourly candle took the high of the 4 a.m. candle, but on Euro USD we didn't take the high of the 4 a.m. candle. So we have an SMT there from a key level, confirming that the high of the 4-hour candle, which is a 5 a.m. 4-hour candle, has formed, right? So now you can anticipate what? Candle 3, which will be the 6 a.m. candle, to expand, right? Now you can drop down again, maybe on the 15 or 5-minute candle to profile this 6 a.m. candle, hourly candle. So you see how you are linking it from the monthly time frame right down to the hourly time frame, seeking what? Expansion alone. And like I said, you can trade this separately. Let's say you have this confirmation already on the 4-hour time frame, right? And you have a C2 closure and you want to trade from this key level. You don't want to go any lower anymore. You just go down within it on the 5-minute time frame and look for a reversal signature. Do we have any reversal signature from the key level? Yes, we do have it here. So you have a CSD there, which is price trading into the key level and reversing this closing below the series of up close candle that engage with the key level. Once that happens, you can take a trade from the C3 candle, right? Anticipating it to trade lower. So you can just take a trade, maybe from here or from here if you entered early. If you didn't, then put your stop loss there, targeting whatever it might be your draw on liquidity. And you're best sure that the market is going to deliver, right? So this is it. It is very simple. Blending the candle bias with profile. And this is just the blueprint that you need. And this is going to help you look at the market from a completely different lens. And as you all know, put your likes on, leave your comments. I do act on them and they help me to maybe navigate through the topics that I know you're struggling with. And this right here was a question someone raised that is having doubt, following up with the video that I did on weekly bias and daily bias, also with the weekly profile. So I noticed we still have some kind of struggling with how to understand this concept. So I hope this helps solve the problem, and see you in the next one.